Yo, what's up you guys? Welcome back to another weekly market update where we do take a look at the market from both a technical and a fundamental perspective. So without any further ado, let's get straight into it. Now before we start with today's video, I do want to inform you guys about this beautiful website that I'm currently using to do all my fundamental analysis and get the latest news updates as well. It's called Fastball. With Fastball, you get an economic calendar. They also have 24/7 news, meaning that you are kept up to date with everything that is happening minute after minute, and in that way you won't miss out on any news events as well. They also have in-house analysis, people who basically analyze the data that they receive, then publish articles on that you can read to further even improve your trading knowledge. And then on top of that, they also have trading signals that is sent to you with a entry price, a TP, and an SL. Now in most cases you'll probably pay about $99 per month for something for information like this, but with Fastball you get it absolutely free and you don't have to pay for any of the information that I've provided you with today. So they also have an app that you can use so that you can get real-time notifications for the signals or any news event updates. We'll leave a link pinned to the description in the comment section below. Please go and check them out. And without any further ado, let's get straight into it. Now, like I said, today is a public holiday in the US. Just to go there quickly, so today is a public holiday in the US, so not much news to be able to look forward to over there. There you can see Martin Luther King Day today, and then we've got news for different trade currencies, but as you guys know, I normally just focus on the US news. So I've already filtered it on here, and here basically you can see we've got the Empire State Index, core sales, retail sales, unemployment, and the preliminary of University of Mexican consumer sentiment. Now we obviously saw that we had some an increase in the CPI last week, and normally how that works, when the CPI increases, it's used as an indicator by investors to measure inflation. A high inflation reading like the one we saw last week normally gives investors the indication that the Fed are more likely to hike the interest rate, and due to the uncertainty that we received in the December meeting minutes of the FOMC released in this month, that said there that the Fed is likely to lower the interest rates. They just can't tell you by when, and this report is a good indication of why that is less likely to happen. Now this was the analysis that I did publish back then, and this for me still stands. I still expect the index to increase in value back to that level. Now we can see over here, purely based off the price action that we have, the market had broken below support. Now this is the structure that needs to be broken in order to confirm this trade. Market printed support, tested it as resistance, broke below that, came back, tested it as resistance once again. We need resistance to get broken, come back, test it as support, and get that continuation. Now, what's very interesting over here, we can see is the market also printed what's known as an inverted head and shoulders. And an inverted head and shoulders pattern is normally considered a bullish pattern, from a technical perspective. Now, due to the negative correlation between the DXY and indices, you can see here the market basically wicked to the upside, came back, and it did close below the structural level over here. Now this level over here acted as a level of resistance, broke above that, tested as support, came back, now back to tested as resistance, because we expect the index to continue higher, and due to the negative correlation between the index and the indices, we can't potentially expect this market to continue lower, and this is the next structural level that I expect the market to pull back to. You can see here we had resistance, support, the market broke below support, above resistance, broke above resistance, all of that resistance is now again turned support. So from here I do expect a pullback, a short-term pullback, before we see any other movement in the markets there as well, for the market to come and test this previous level of resistance that is now acting as a level of support. There we go. Let's just do that, right? And then next up we've got the Dow Jones. If you guys remembered on the last breakdown that I did, I told you that you can start looking for selling opportunities on there. In fact, if you watched the last video, I actually took the sells on the video that I made at that level over there, and the trades are basically still running over here. If you did watch the video, you would have seen there I said that the best place was to sell at that level, because now I can get my stop loss above that level over there. Well, my stop loss is above that level over there. Now again, this market still has a lot of more room to the downside. You can see here where we cannot anticipate the market to pull back to yet, because we need to wait for the market to break the structure first. We can see we have the similar price action that we have on the NASDAQ, and we have resistance got broken. Market came back, tested it as support, broke below support, came back, tested it as resistance. We had some consolidation, we again broke below support, back tested it as resistance. From here, the lowest I do expect this market to pull back to is this previous level of support that it had created. From here, I'll probably just monitor the price action and see what kind of update we'll get, and I will make sure to keep you guys up to date as well. Now the S&P 500 was yet to break below this structural level, so I'm still waiting for that to take place. This analysis still stands. And then gold also, we can see that gold is currently trading at this level of resistance over here. There we go, that is the one. Okay, there we go. So in order for us to look for any selling opportunities on gold, we obviously need the structure to be broken, acted as a level of resistance, broke above that, came back, tested it as support. If we are looking for any selling opportunities, we need a clear break below support, pull back for resistance, and then right here we would be start looking for selling opportunities. Now the way we confirm this is a clear break of structure. You need to wait for the daily candle to break below the structure and then close there as well. Guys, that is it from my side. Let me know your thoughts and your analysis down in the comment section below, and thank you for your time. And as always, cheers for years.